Microphone check and screen share check, please. It should read screen share check, sorry. All right, good night, guys. Nightly Strategy Podcast for June 14th, 2022. Thanks for your patience. You know, sometimes when you have a bespoke process, it just takes longer. So I had to go back and reset the Excel connection to the quote server and redo the reports. So, my goal is information independence for you. The TC2000 bundle, the TradeStation bundle, the Ameritrade bundle that Phil Wu is putting together, all of those allow you to get all the reports, all the information directly from the vendor and cut out the middleman. I'm putting myself out of business by doing that, but you need to know that those are options that are out there, okay? All right, so this is the trade of the day. This is Tesla. There's a $7 standard risk box in the yellow. I want you to notice that I am not trying to make every possible trade that I can imagine on this. I am waiting to see the pattern that I want to see after the morning shenanigans have occurred. I'm looking for a COTA 2 on a rebound on this one. Now, the other trades are there. Like I could do a form of hybrid frog in which this thing opens where you see it opens and I put a minimum manageable risk box to straddle the open, and then when it breaks down below that, I can get short right there, and then I'm not going to lose money on that trade because I should be able to get out of that somewhere over in here. And if I continue that play, when I put a manageable risk box off the bottom, I could actually get that trade as an entry, and I'm not going to lose money on that trade because when I see it comes up and hits the PSAR and starts to reverse, I'm going to cash the trade. And then I can hang this risk box from the top. And when that fails, I can get short there, and I'm not going to lose money on that trade because when it comes down and makes a higher low, I should be able to get out of that trade right there. So there's 4 trades that are all somewhere around 1R that I'm not taking because I want to be sure about the trades that I want and execute them relentlessly. And in this case, I'm waiting to see the COTA 2. So I see a low established here. I see a higher low. Now I'm ready to see it cross the PSAR, cross the dragon. I decide that I'm going to COTA 2 that on the 5-minute chart, hang the standard risk box. I notice that when it starts to roll up again, it has made another higher low, and now when it comes up and hits the PSAR, which is a formal testing point, and it breaks through, I put a second position on, and now I'm going to tighten my stop up here because it's made a new high and is starting to stall, and I get 2 positions in, and now I'm going to crush this trade. I'm hanging a half risk box from the top. When it rolls back, the second bar down at the edge of the dragon, I gave it a little bit of extra room to the edge of the dragon, but I got the trade that I wanted. Not chasing every possible rabbit. I'm not desperate to trade. I am desperate to not trade. There's so many good opportunities out there every day, all day, just for the looking, that there's no reason to be scrambling after every possible hint of an opportunity. Now I notice that it's making a higher high once more, and now I'm tempted. and now it fails. It's still making a higher high or higher low, and now it crosses the dragon, takes out the PSAR, standard risk, and I'm not going to lose any money on that trade. Could I have taken that one here? Sure. I didn't have a zero state, wasn't ready to trade. So I just mark off what I'm noticing. If the higher high continues, I'm good to go because I know what the upper limit on Tesla is. It's $70 off the low, which is about 630. This thing could go to 700 intraday before it becomes irrational. There's another almost $30 available north. There's $36 available north of that entry. So there's no hurry. I'm not going to lose money on that trade. My entry or my exit should now probably be like right about there as I'm going forward. And now it's a science project. ARE. This is a Godzilla. That's the opening. About a 50-cent manageable risk box. I notice once again that if I was scrambling after a trade, I might have thought about getting short right there after it moves a reverse box off the top on something that's in a Godzilla. I could also think about trading it as it comes below the dragon, which is really where I want to first get it, or down here if it should take out the PSAR. But I'm not in a hurry on this one. Now it's coming through the dragon and approaching the PSAR, so I take it here. My stop is about the width of the dragon, and then the collapse through the PSAR gives me that massive move, which is unsurprising. Notice that it's down here around yesterday's close, where that price action was so amazing. That's yesterday's closing bar. So it's down here around this test. That's a bit of a front run. I wouldn't be offended if you waited to see like the PSAR taken out and the price coming out of the dragon. That's fine. You're not going to lose money on that trade. Now, right about here, I should already be stalking this thing for an exit. Because if I just use half a risk box, this thing sold off all the way down to here and has now pulled back almost a full R. So this is bad technique. I should be out of this trade already. I should be out right around here. So bad form on my part. I was a little bit. I waited for the open of the next bar and gave it a chance, and then when it took out the high of that bar, now I'm out. Now it rolls over. Now this thing has been horrible. It's Godzilla and everything to the downside. So I don't care about the upside at all. Not in the least. Zero interest. And now it gets a doji in the middle of the dragon and it rolls over. And now as it's coming out of the dragon, I re-enter. I hang my standard risk box on it. There's my exit. I'm hoping it's going to come down and test this. That would be awesome. That's about 3 or 4 R to there. It's already starting to stall. Failure to fail. Coming to a doji near you. Ah, thank goodness. Now, my stop should have been like right about there. And now on this gift, when it fails below here, my stop should now be down right about there. I don't like to let winning trades become losing trades. You could already feel that thing reversing. So I take it at the edge of the dragon. That's about 1.5 R. This last one was horrible. That first one, man, I gave way too much back on that one. Why am I not interested in the long side? Because this thing's a Godzilla. It's been horrible. The PSAR is down. I'm not in any hurry to trade this thing. Except to the downside. Missed a short. Now I'm interested to the long side. Broke the PSAR. Standard risk. Broke the PSAR. SSC. I better have my stop to there and lock it in. Lock in something. If I don't get that exit, I'm just going to cut my own head off. I better have locked that in. Like, on that doji, I should have been here. I should have been locked into there. All right, acceptable. I like that little doji, and now it's starting to try to reverse. Now, notice this is part of the upside narrative. This is trying to create a kata 2 to the upside, right? So I should be looking for something like a breakout, like a 1, 2, 3 entry, or breaking out of the dragon. Nothing. So that's about 1, 2, 3 R, 1, 2, 1.5, so 4.5. And then probably 1.5 on that. So that's about 5 R. Don't be in a hurry to trade. And then don't let winning trades go negative. Peak. This is like ARE, is something that's been horrible. Godzilla has been collapsing. Here's the start of the day. Standard risk box of about 20 cents in the yellow over there. Essentially a collapsing dragon with a manageable risk box off the top. So if I take that manageable risk box and hang it from the top, I'm getting the entry about where I want it to be. It's collapsing. You can see the dragon has rolled over. We're below the PSAR. There's nothing but free running below. I should be stalking a scratch. It doesn't, and it fails through. I get a second position in when it continues to fail. So if I'm putting stamps on this thing, I'd call this one a collapsing dragon, and I'd call this one a collapsing dragon. And my job now is to get this one to no lose on the second position as soon as I can. I better be there now. That's a reasonable exit. If I take my little half a wrist box there, hang it off the bottom. Yeah, I gave about half back on two positions. That's 1R give back. And now it is reversed off the bottom, crossing the dragon. I'm willing to take that one as an SSC. Scratch. Short. When the 3-period MA comes through the dragon. Now, could I have taken it a bar or two earlier? Yeah. Same difference. Same risk box. It reverses against me immediately. Scratch. The failure resumes. Short. Micro gain. Miss the SSC. This one is U.S. Steel. Standard risk box, about 20 cents for me on that one. Crosses the dragon. This looks like an SSC to me. I'm going to execute at the red line just below the dragon, so I'm really only risking about 0.4 of the MMRB. I don't have it, and then I'm going to stop and reverse and go with the collapsing dragon if that fails at that thin red line. Failed. Reverse long again, same trade. I better be probably about here by now. In that first bar or second bar when it closes, so I could be here. I could be here and take the exit. And then the re-entry. Your call. Don't lose money. Half a risk box off the top, starting to fail. Cash. Now this gives me a 1, 2, 3 to the downside. Risk box off the top. I'm executing at the thin red line, so that's about half of a risk box. I just made 2, so I'm willing to invest half of the market's money back into this one. I better be at no lose already. I better be about here right now. Starting to fail further. I better be like right about here. I want you to notice that what gets my attention here is this little construction. If that gets violated, if it reverses to the upside, I don't want to be in this longer than that, to the north of that little yellow box. I better not let it get higher than that. Shit. Heck. Bad form. That should have been, with best play, this should have been somewhere around in here, because it came as low as this, and then started to reverse. I should have gotten out at that, well, let me make that a yellow dot. I should have gotten out there, and then I should have gotten short again here when it gets through that little yellow box of the close and then the open with a lower high and a resumption. That's where I should have gotten out at the first yellow and then re-entered short at the second yellow with that's better form. Now I'm going to hang now that I got lucky and it's in my favor, I'm going to hang that half a wrist box off the bottom and take it. Should have been short. Now I've got something like a Kata 2 here. Takes out the PSAR. Actually, I might even call that, if you called that an SSC, I would not be offended. Because I could see that as a sell-off like this, and then a crossing of the dragon, and then taking out the PSAR. I could see that as your SSC with the standard wrist box. And I'm going to execute at the belly of the dragon. So once again, I'm only going to risk about 0.5 or 0.6 on this one. Nothing happening. It rolls back into the dragon a second time. I felt like I should have gotten out like over here and didn't. It didn't hit my stop, but I feel I should have gotten out. So the second time that it doesn't make, it makes a lower high and now it's starting to fail, that's enough for me. Get out. So not especially good form on this one. And missed the short. Should have had the short after that doji. I should have had the short right there. Missed that one. I should have gotten paid somewhere in here with an exit like right about there. I should have been able to catch that and then capture the exit there. Bad form. All right. Market condition today, or market health check. Fall has turned to winter. It closed here, slight gap up, sold off to a new 5-day low, 10-day low, 30-day low, 150-day low. It managed to close back a little bit lower than yesterday's close, so it's a negative day in the S&P. Closed at 373. We're 22% off the top. Notice how large the 5-day volatility is, but notice that the 1-day volatility has started to diminish. and there was not the same gap that you saw before. So the mad rush to the bottom is beginning to diminish, although the lower pressure is still there. You still got that strict downward short-term momentum. You have winter. You had lower highs, lower lows. So anything below here is instantaneous short, but because the volatility is starting to decline, I can also start posturing for this move back to the Bollinger Band mean. So that's not out of the question. So if that's one unit of risk, 1, 2, 3, just back to the Bollinger Band mean. But I am noticing how large that 5-day volatility is, and when you add that to the big sell-off, this is the market in Godzilla mode. So I'm not even thinking about swing trades. All right, so let's find our trades here. So here's the S&P off 0.3. The Qs were better at plus 0.18 in the green. Emerging markets were best at 1.39. Diamonds were off minus 0.4. The Russell off 0.48. Treasuries continue to get smoked, minus 1.26. The yield's got to be off the chart good on that. All right, here's the symbols that were better. Sectors first. Agriculture and discretionary off just a little bit. Crossing into the green. Robinhood, blockchain, and biotech up 0.16. Energy and tech 0.2 and 0.6. Both of the ARCs 1.1 and 1.3. Lithium batteries 1.6. The FANGs 1.97. Individual companies that dominated. Tesla, the most important stock in the world, up 2%. Closed at 662, so it's still under the key price level of 700, but a bit of a rally today. Devon Energy and Rivian up almost 2%. Microsoft and Apple, the tech staples, that's where the strength in XLK is coming from. Those two guys. And that's it. Downside, sectors that were weaker. Lumber, commercial real estate, oil exploration, Brazil, materials and real estate off 0.78. Then finance and Ethereum off 0.9. Aussie dollar 0.9. Cluster of global future of finance, blended commodities, Mexico, staples off 1.2. The other lumber 1.3. VIX off 2%. That is actually another micro sign of healing a little bit. We saw the volatility begin to diminish a little bit today, even though it made new lows. But when the VIX is then losing money, then it may be a hint of the possibility of a dream of a turning point, which is why we frame the market in both directions. Oil off 2.1, clean energy 2.4, wheat and precious 2.6, marijuana 3.5. Now, individual companies that were worst, all of the financial disruptors. There's blended large cap crypto minus 6%, Bitcoin 4%, Squarespace and PayPal off 1.7 and 4%. Cliff Natural Resources minus 2.7, Alcoa 1.8. U.S. Steel 0.9. So all of the metals, the steels, are still very, very weak. Coinbase 0.8, Bakkt 0.45. So just more of the same. Very few things showing any strength to the upside. But it's the large cap Uber techs, uber large caps like Tesla, the FANGs, Microsoft and Apple, and that's about it. All right, now I want to show for Tim. So he's posted this chart here. Now I want you to follow the logic of where to look for the entries in standard work. Now I want you to notice. So he's got a sell-off, and he gets his entry here. Whoops. And he's got his standard risk box here. All right, so there's his standard risk box, is that red. Now, I'm going to just draw for you the PSAR flips with that thick black box. And now it's a downward move until the next PSAR flip box. That should be red, sorry. And here's the next PSAR flip box, which tells us that we're entitled to start looking to the upside. And then we get another rapid PSAR flip box all the way down to here. And then up to this PSAR flip box. Now, when that piece, we're going to come back to this and just take a look at a structured approach to framing these trades and trying to align our rule sets and our decision making to those key indicators of the PSAR flipping. I should be getting short right about here. Not here. And when I put my standard risk box on there, and I realize that I'm going to exit, oops, sorry. Let me get this out of the way. I'm going to be exiting not later than this thing crossing above the PSAR. I'm not even risking a full standard unit of risk because I'm going to get out not later than that green arrow. But meanwhile, this thing moves to a maximum favorable excursion all the way down to here. And if I just take a structured approach to the MMRB and take half a risk box, when this comes off the bottom, so I should be stalking an exit like right about here. So his exit was excellent. Nothing wrong with that. So in my view, according to this logical flow here, he should be getting, his optimal trade is from there to there. And now when this thing reverses and rolls over and rejects at the dragon, I should be getting short right about here. With another standard risk. And I should be in that trade down to here. And half a risk box off the bottom, I'm looking for an ideal exit somewhere around there. So I should be aiming and fine-tuning my rule sets in order to do something like, come on, something like that trade right there. That's the trade I should sort of be getting. And then when this rolls over again, I love that short. That should be one of those. And then I should be getting that risk box. And that thing stays short all the way down to here. I don't mind getting paid right here. We didn't let that go negative. So trust the PSAR, look at the slope of the dragon, and watch where those PSARs are flipping as your indicator for entry. Now, over to this one. Now, on the long side, I can be thinking about my supported spring crossing right here because the PSAR has flipped. And now, with my standard risk box like right there, I'm not going to stick around any longer than the bottom, of the RL10. So my exit would be something like that. Let me put that in blue so you can see that. So I'm only risking about half that risk box. So my entry long should be approximately there and not here. Now, with best play, I'm probably going to scratch this trade. I really don't want to let it go all the way down to the PSAR. I should at least be able to get out here. But when it has moved that far in my favor, at some point I got to get to no lose plus dinner for two. All right, now on this one, the PSAR flip happens once more. I should be stalking my entry and getting an entry short right about here and not here. See the difference? At the PSAR flip, and then my standard risk is there. And as you can see, based on the PSAR flip, again, I'm not going to take a full 1R loss on that one no matter what. And I should be able to get most of that trade. Now, on this PSAR flip, I should be getting an entry somewhere around here instead of here. That's half an R. And again, with my standard risk, I shouldn't be taking a full R loss on that anyway because I'm going to be exiting somewhere around in here. And now this trade, when I look at my little gauge over here for half a risk box, that's a pretty good exit. It might have been a little better. I mean, if you're going to be a purist, maybe he could get it here, but that's a pretty good exit. So nothing to quibble about there. I like this short here because he's about at the PSAR dot. That's pretty good. And when I look at the standard risk box there, that's a pretty good trade. I'm not offended by getting paid right here because notice now where he's tightening up his shot group, we would call that in marksmanship. He's getting that right where the exit and the open of that bar near the doji, and he's getting a pretty good exit right there. So I think that's pretty good. I don't mind this short at all either because it rolled over and it sold off and started to recover, so we got paid a little bit. But now notice it doesn't even get out across the PSAR, so the strength of the PSAR is still down. We got to be working on our endurance in order to get this short because the market is starting to vote downward. Look, you got this great big fat, let me make that a little bigger. You have that high, you have a lower high, you have this breakdown. All of this is sloping down. So right in that little elbow of the dragon where it reverses, that's where you got to get that thing. Or not later than here because of the collapsing dragon. And then you get paid on the great big move of the day. So right at the time the market has finally decided to collapse, we're not mentally ready to do that. So what we got to do is, in this region, when we're actively trading, in this whole blue area where I'm actively fighting, I've got to find ways to regenerate energy and rebuild my cardio so that I'm ready to keep trading while the market wants to trade. So that's one of the lessons. Also, I want you to notice where the PSAR flips are and being relentless about not letting winning trades go negative. Being mentally tired is evidence of emotional commitment to the trades based on beliefs that I think it's going to work, and you just got to get rid of that. Does not help you. Eliminate that from your behavior. Eliminate that belief. It will keep you from getting tired. It allows you just to stay with it, allows you to cut it according to the rules without giving it a second thought. That's one that did not work. Get rid of it. Does not matter. Move to the next. The next trade is the one that matters. But not if you're tired. You got to be in the game if you're going to play. You got to be ready to play. At the same time, if you're mentally tired, don't trade. So we just got to work on the cardio. That's all that is. I'm waiting to, again, reminder from that Tesla, I'm waiting to see my Kata 2 trade or a collapsing dragon so that I'm not chasing rabbits. And gave up about 3R because of that. So what? Bearish normal, wildly oversold. Ace, the 2-day is not quite as bad as it was yesterday, but that's the only thing positive at all. We are just right on the edge of risk on here, still in the green. McDonald's, IBM, Johnson & Johnson, Cisco, things getting murdered. Alcoa, Disney, Tesla, Intel. Look at all those auto framers. Look at all the 5DD collapses. This is a market on thin ice. Winners today. Microsoft. This is telling you where the last gasp of belief and defense are. You should know who those guys are. If they fail, look out below. Tesla and Microsoft. The ETFs, just a ton of everything on the auto framer, almost everything on the RSI2 in single digits. Oil, about the only thing that was any good, and even that was down for today. All the auto framers, these are the ones that are the most sold off, have the greatest possibility for rebounds, but if they collapse, the greatest likelihood of big failures. You should take that into account. Only a few squeezes, but importantly, Tech, Microsoft, Walmart, Staples, that's really Tesla. Intel, or discretionary, that's Tesla. Intel, Alcoa, key targets. Did not fail large today. Pick your favorite Godzilla. You know, there's Peak is still in play on the short side. ARE is still in play. I would prefer Peak because today's price action was a 1.49 on the Z1, whereas ARE was a 0.56. It was actually not much of a harsh sell-off. WFC, on the other hand, is in the middle of a failure. LNT is as well, as is Pool. So what I'm looking at here is the Z1 as looking for the things that got murdered today. But you can see the 5-day Z-scores. These are all in late-stage collapse. In the tactical symbol set, notice that that the two lumbers, their 1-day Z-scores were not really all that painful. Damn it. Mouse sensitivity issue here. There you can see the little bit of quietude that crept into SPY today with a 1-day Z-score of 0.19. And diamonds so that was not a horrendous sell-off. Even though the 5-day move looks murderous, the 1-day move was not. On that little sliver of hope, we are resting all our dream. And look how non-volatile on 1-day XLK is, minus 0.87. Almost extraordinarily not volatile. Same with Apple, minus 0.86. Microsoft, minus 0.87. That is the opposite of panic. Whereas you are seeing some panic about the treasuries with that 1-day Z-score. That's shocking. That's shock and awe. Nothing in the top level of the fireworks. There's a handful of fence sitters. McDonald's especially interesting with his 1-day Z-score of 0.05. The most quiet on the basis of the 5-day volatility. Notice that there's very few that are below the average. Just a few. Whereas when you look at the most volatile, those 5-day Z-scores are giving you a sense of just how broad-based this sell-off really is. Look at talking so many above 3.5 sigma all the way up to 4.5. Just as a point of reference, that's how bad peak is. But CMS, look at that rascal. Today was just murderous in CMS. That deserves a look. A 4.5 sigma move. This is going to be just a miserable sell-off. And the same with ES. It's going to be like that too. ES and NI. If you just want to indulge me a little bit here. what was it, CMS? Yeah. Ooh. Yeah, you can. CMS had it's had a horrible 5 day, and today was just absolutely murderous again. No sign of the panic selling off. Notice that if we'd have been smarter or better attention, the failure below yesterday's low should have given access to that whole move. So you like to see, you want your alerts set for movements below yesterday's low as that trigger for the downside move, because all resistance has failed, or all support has failed. That's the sound of breaking ice. The other one was NI I wanted to look at. Let's see. Yeah, same thing. Notice the importance of the breakdown below yesterday's low. And the rest of that move. And more to follow. More pain and suffering to follow. Yeah, it's well beyond any reason. It's all the way back to COVID sell-off time frame and collapsing. Well, not quite. Not quite. COVID's way back there. Yeah, but that's in free fall right now. So that's how you can use this little chart here when you compare the 5 day. So you got a very volatile, and you can compare the 5 day and the 1 day. So you're seeing it actually in the middle of melting down. Whereas something like WDC has almost no meltdown today. Let's look at the difference in that chart. So yeah, the sell-off is beginning to diminish. We saw that also in the S&P starting to diminish. 5 day misery, but the 1 day beginning to become contained. Still, if it fell below its yesterday's low, I'd be short on Western Digital in a heartbeat. All right, enough of that. Yeah, if you don't have TC2000, it's harder to see these things. Oops. Yeah, so we want to get the market call right tomorrow. Look, everything's red. Look how horrible this this looks on the regression. But again, you can see how that is starting to, you could argue, stabilize a little bit. Today was not as bad as yesterday was in the context. All right, on the charts. If you want me to give you feedback, then mark up the charts with the coach's eye so you can compare what I say to what you think I'm going to say. If you just put the chart in there without doing that, then you're not going to benefit from the coaching that I give you because you haven't invested in the effort to see what's going on. Now, I want you to notice the direction of the dragon. That should tell you what direction we should be trading. So I love this short. I love the exit. I should be short here. When this doesn't work, this thing is supposed to fail right away. When it doesn't, get out in here, not up here. As soon as it fails back through the dragon, get on it, not here, and don't let it come all the way through here. Those two little, I'm going to say, half-assed trades ruined the gains of a really good trade. And this one, we're getting long here instead of here. This is where the PSAR flip. So I should be long here, and that's my maximum favorable excursion, so I shouldn't let that one go negative. But we let a late entry lose as much as half of the big one. Now, I should be short here, but I'm loving this short. Now, when you see that cluster, you can get a second position there. And then I should be getting out here. You let that come all the way back here and then back to here, and then we got out here. This short down here, I should be getting short right here. So I should have been short here. I might have added here. I should be getting out here. And then when this rolls over, I should be getting short there instead of here. Look at the difference. And then when this doesn't work, I should be getting out right away and then re-entering when it crosses through the dragon, and I should get all of that. And we gave back 80% of the gain. We kept this much, and we gave back that much. We gave back more than what we were losing on these trades. Now you're getting sideways quiet channel. Good way to stay out of this. Now you got a PSAR flip here. You waited until this. That's fine. But now look at this. Holy mackerel. We got 1.5 in our favor, and we let that go to scratch. I can't say any more than that. Now, when you're looking at your chart and you want coaching feedback on that, you should be able to see this. And you should know that I'm going to say something about that. And I want to see you say, yeah, I now notice after the fact. Now, you may not see that in the middle of it. Life is hard. Trading is harder. And so in the middle of it, maybe you don't notice that. Maybe you don't notice the RL10 crossing the baby dragon as a signal. Maybe you don't notice the price entering the dragon and leaving the dragon. But you got to start noticing those things. And the way you start noticing them is that in your coaching, you notice it after the fact, and you make a note to yourself, watch for those signals so that I don't let a brilliant trade come back and scratch. So you got to mark up your charts on things that you are wanting yourself to notice so that you can look for them in the game. If you won't do that on your charts, why should I? I will, because I'm trying to be your good coach. That's why. And I'm infinitely patient. But I also may not live forever. This is a good short. That's where you want to get short. As soon as it crosses in the... Notice how the dragon rolls over, and now you're on the side of the angels. Stop taking that one. Wait for a Kata 2 or something. But this thing was so horrible, we're giving back all these good gains. I'm sorry. That was the exit. Again, we gave back most of the gains. This is a good short, and then we let it come back to scratch. This one is a good long on the SSC. It was this far in our advance, and we let that one go negative. That was more than an R to the gain, and we let it go negative. So stop losing money on winning trades. All right, these are all, all right, Sam, these are all from a simulator, and it's there's no skin in the game. Now, the pattern, I like the way you've notified the pattern is a hybrid frog. And here was the open. There's his hybrid frog box, so he gets short here. Now, this thing comes down this far. Maximum favorable excursion, 0.79. Captures here for 0.34. That's fine. Now, if you want my coaching to be valuable, you should be looking at, double bottom, SSC, or Kata 2. Where are the PSAR flip boxes? We should be on this one and killing it. The hybrid frog is an advanced technique traded at a moment of maximum uncertainty. The Kata 2 is a second generation, much more reliable, tipping the bar in your favor, and that's the one you should be working on. And when this rolls over, I have an owl entry short here, and I should be getting that one. Both of those are preferred to just blind hybrid frog trading. I already showed Tim's. Kata 2, it was strongly in our favor, and we let it come back to scratch. That'll just hurt your feelings. That's why you got mentally tired later in the day. This little sell-off held support above the dragon, crushed it. Well done. And now that sets up a Kata 2 for another nice move, but we got to make something out of that. Good job staying out of the chop. Now I want you to notice this. A high, a lower high, a lower high, turned to winter. We could be short here, and you're going to crush that. And now you got another lower high. We could be short here when it crosses the dragon, and you will crush that. Read the turning points of the dragon. Trade with the dragon. Open, falls through. This is a legitimate short. That's still pretty good. I like getting paid here. Now notice this cluster reverses. We could be long here with a risk box. That would be an SSC. I'm not sure if you got short there. If you did, I don't know why. But if you got short, the scratch was fine. If you got long here, the scratch there is fine. Now, short should be here. That's pretty good. We gave back a lot on that one, but you got paid at least. Now, you might have been tempted here, but you should get it here. That's a pretty good entry. 1, 2, 3 is about here. At least you didn't. Let's get that instead of a scratch to a no-lose plus dinner for 2. And then your emotions will be better because you're not regretting how much you gave back. And then you crush this on a Kata 2, and you get all of that. Exit, long, scratch, long, all of that. And you should be crushing this. Now you feel how that dragon, and then here's the bottom of this thing. When this thing reverses and starts failing immediately, great job shorting that. Good job capturing that. Your SSC should be here, not here. And now when it gets this far above, we should never let that become negative. Never. Then our short is here, not here. And if you're short here and you've got that much in hand, you cannot let that loose. That's a sign of being mentally tired. So get in the weight room or do your cardio. And now notice lower highs, We should be short on this all day. All of this. Exit here. Should be long here with a PSAR flip. You get all of that. Exit here. PSAR flip box. Short here. Probably a scratch. PSAR flip. Long here. Probably a scratch. PSAR flip. Short there. All of that. Exit here. Get paid. PSAR flip. SSC. All of that. Exit here. Get paid. Every little one of these completed cycles should give you a plus of energy so that your mental bank account is going up after each properly traded trade. That should be a boost. Listen to the fans cheering. He's playing well. That's how you get not mentally tired. Luke. Z3 pinch begins to expand. He gets the long. That's about all there was. Gets a good re-entry. Gave back too much. PSAR flip. He gets short. There wasn't much. Re-enters. There wasn't much, although there was some. Re-enters. He's just firing away. Gave back way too much, but he got entered in. Gave back way too much. Got paid. Got short. Pretty good. Missed the re-entry. Got short in a big way. Here's the second position. Here's the re-entry. Here's the re-entry. Okay, 11R, get better. My dog upstairs concurs. Arch. Same Z3 pinch. That feels like a COTA 2. Let's try to at least scratch that one. Brilliant short. Excellent getting paid. Now it rejects the PSAR and comes back out. That's a pretty good entry there. At least you got that. We should be getting a fraction there. Here's where you can be long instead of here. Then you can exit here for about an R1/2 instead of the scratch. This is still okay. You know, you let it clear this, and it could be breaking out. You were testing this. If it does break through here, this is large, but at least you trimmed it fast. Now, this is the one where you got to be entering here. When this reverses, that's like a little COTA 2, so we got to get that entry here instead of here. Then this one doesn't lose money, although you'd really want to exit there. That's a good short. Let's try and scratch it. This is where your entry long should be. That's still pretty good. When you notice this little formation, and it barely fails and starts to go, and it's already cleared all of this previous junk, second position, and now it's in your favor, and that's a pretty good exit. Here's your PSAR flip. You got short pretty quick. That's a good trade. So that's one. It could have been 3, but that's pretty good work. That's a big improvement over last week. Continuation for Arch. Now the whole thing is rolled over. Notice how the RL270 is rolling over, and everything should be down. Great short on the PSAR flip. Good cover. He waits for it to fail again, gets short. Great exit. Good try on the long side. As soon as that failed, you could be short here. But this is at least a brilliant place to get short. If you're short here, that could have been your second position. Now on this one, when it breaks that shelf, maybe a second. Great cover. This is when this rejects and rolls over, we could be short here instead of here, and then that pays off. I'd have been tempted, I think, yeah, right here, but that's a pretty good one. That's doing a nice job. Nice work all day. 3R. Much better work. Much more deliberate, respecting the flow of the dragon. That's nice. I've already spoken to you, Woj, on this one. Adding some span of control training in here. I'm not satisfied that you've got the first one down yet, but this is pretty good. Although, oh no, it's not, because we let that come all the way back to here. Excellent re-entry. We gave back a full R. Now this one should be executing here. PSAR flip. And now this gets paid big, and we should be exiting when the doji collapses, not coming all the way back to here. So that 0R should have been +2. And now, kata 2, kata 2, kata 2, kata 2. Short, short, long. Short, because you got a high, a lower high. That should be short. You got to start marking these charts up so that you can start seeing the things that are there after you've made the trade. Sam already talked about the hybrid frog is a big advanced technique. Now, I do want to show something. I know that you need to review the rule set, because the hybrid frog is a purely mechanical rule set that features a trailing stop. So if this is my, I guess this is the open here. So he hangs a hybrid frog box in either direction. It moves out, so it goes here. Now that's a full R in hand, which means that a trailing stop, your exit should at least be here, and you let this come all the way back to -1. So I know that you need to work on reading the rules. Then I want you to notice where these PSAR flip boxes are, because that's an easier trade than a hybrid frog. Yeah, this is the point on your stats. That should drive you nuts. You had more than one R in hand, and it ended up losing one. That's an adverse move of -2.14. So if you're going to do that in the simulator, stop working on the simulator unless you are going to use this as negative reinforcement. I should see text block in here that says, don't do that again. But if you post it in here and you don't know that, then I'm not sure that you're seeing the lessons that are there to be learned. That's why you got to mark up the charts with your coaching notes so that I can see if you're looking at your own trades through a coach's eye and not waiting for me to tell you what I see. So this is not a hybrid frog. If the open is here, if the opening is here and I hang a box from either side, I should be long here and at least scratch. And so this is not a hybrid frog entry. But now with everything down, I want you to notice how these PSAR flips to the downside are getting paid consistently. Those are the easier trades. Focus on the basics. Now this is where mental resilience pays off, and why you need to work on letting go of your beliefs in the correctness of trades so that you're not depleting your energy. Because precisely at the point where you should be re-entering short for the big move that pays off the whole week, we missed 1, 2, 3 trades of the week. Now, this short here should be happening here. Here's the PSAR flip. And now this should at least get paid. And then the re-entry is here, not here. That's a scratch instead of losing a half. This is okay. That's okay. Now my short must be right here. And now it doesn't even come close to the PSAR. Then you don't even have to have that trade. You should be short from here and riding that whole thing down. Look at the PSAR. It's telling you what to do. And if this got you out, this should get you back in, because it rejected, and this is a collapsing dragon once more. Let the trades generate energy for you instead of depleting you. And the only way to do that is to have a lighter hand on the reins and stop believing in the trade. All right, so I know this is not an L. Is this an L? Okay, that's an L. Yes, that one is an L. There was one you had that was not. I wanted to show. All right, let's see. Those were simulation trades. Now, I guess this is okay, so that's a rejection of the descending PSAR, so that's why you want to get short here, because this rolls over. I don't mind that, and so I infer, because I can't tell from your markup if what I'm saying is correct, I am presuming that you are short here with your risk box to here. If that's true, then our maximum favorable excursion is here, and I have to get out of that here because that's my PSAR flip box and my standard risk box to the long side. So I don't understand why we're getting out here, and it's taken us that long to get in when I think we should be getting in here, which is a full R earlier by getting in here. And now this. I mean, come on now. You got this? It already warned you with two dojis. It said, warning, and it reversed, so second leg up. Warning, third leg up. Extreme move. It's well beyond the river. And now it exits and it opens, doesn't even come close to making a new high, and starts rolling off. I should be out here. This was the last third leg gift, so that's the bar. So if you just took half of that bar, you're out here instead of here. So this minus 0.1 trade should be this, or at least this, or at least a 1 bar low, or at least re-entering the river, or a 2 bar low. Any one of those is a winning trade. So I need to see evidence that you are noticing those signals at least after the fact. Otherwise, I got to be painful about making all of these notations now, and that's part of the learning process. So for me to know that you hear what I'm saying, I need to see evidence of you making notes on future charts about what's there to be seen, not just reporting what you did, but noticing the other things. If you don't put those notes in there, then I feel like I'm wasting my time, or I have to find a different way to explain what I want to see so I can see evidence that you are internalizing these ideas. So don't let that, wherever you enter, don't let that trade go negative. Capture Now, this is where you should be short. You're still in the trade where you should already be short. And then this one should be short here, and this is where you should be covering it on a 1, 2, 3 and get paid. And I should be long here with a stop, something like that. And then quickly, when this rolls over and starts to fail, don't lose money. Don't believe in the trade. Are you asking me what questions I have? Yeah, I have questions about that. I mean, I'm not sure why I'm short here. I think I should be. I think I should have been short here and covered this, and I think you should be long here with a stop down to here. And then when this starts failing, I should be out somewhere not later than there. And then I should be short when it comes out of the dragon. And then have all of this. So those are some things that I'm seeing. These are all simulation trades. I've made my points on those. Yep, I think those are, I've covered all those. All right. That's everything I got for tonight. If you want to get maximum value out of the coaching charts, here's the mentality you got to have. You got to say, as an independent, individual, self-actualized trader, hey, I've got a plan and I know what it is. And then I did these things. Here's what happened. Here's what I say about what I did compared to my plan. And now when I look to the next level on this, here are the things that I see on the chart that I didn't see when I was in the trade. If there's a lot of things that you're seeing after the trade that you're not seeing in the trade, then that's an important insight, because now there's some kind of tunnel vision going on where for some reason you're not seeing those other signals, probably because you're too tightly emotionally connected to price action and wanting it to work, instead of dispassionately looking at signals and looking ahead a couple bars to see where different decision points are. So if there's a lot of things that you're seeing after the chart or after the trade that you're not seeing during the trade, then we know that there's some kind of perceptual filter on there, and it's normally emotional connection to the trade, or span of control issues, or indicators are too complicated and we're not seeing the most essential items. So investigate your practice in that way and start looking at the game film dispassionately, like you're looking for evidence of the things that I showed on Tim's chart, the things that I want him to see about the PSAR flips and where ideal templated entries are being made compared to where his entries are being made. And I noticed that he got better later in the day, but he was also tired. And so at the very moment when his trading practice was improving, he didn't have the mental energy to take the trades that would have paid off the most. So we want to start better earlier so that we don't get tired, because one of the things that will make you tired is when you realize that you missed something and you're staying with it and it's still in your head. You got to learn to just let those go and move to the next trade and reset right away. So there you go. Forgiveness and gratitude. And plus one to you guys for having the bravery to sit and listen to an old fat man ranting. But that's how you're going to get better. That's how we're all going to get better. And that's the commitment. We have got to be the harshest judges of ourselves if you want to have a chance of surviving and then thriving. Because the guys on the other side of the trade do not care about how you feel. They want your money. And we're not going to give it to them. We're going to take their money because they're not nice people. Anyway, there we are.